Yeah, hello, good day. My name is Prince Emi Kasali. Today we'll be looking into how to copy a trader, making use of Tradeversity traders. Before you can do this, you must have, activate your account with $100, the gold package on Tradeversity. Then you open an account and set up your account with PU Prime. Then also log into PU Social, link it up with MetaTrader 5. So that is when you can do this. So this is just to copy the trade after you've done all this. So you need to open your PU Prime, PU Social. Okay, when you click on PU Social and you are on this page, Discover. Okay, then at the top here, you type in Lexo. Lexo is one of the most stable guy in Tradeversity, that is trading for Tradeversity. So this is Lexo. So we click on it, make sure the name and the logo stays the same. So if you look at this account, the max drawdown is less than 1%, and winning rate is 75%. Then loss rate is 24%. So this makes sense, and this guy has been trading for a while, more, as in beyond February 2024. So he has a good record. You understand? So the next thing is to click copy here. Okay, then it says performance fee. That means what he will be charging for trading. So as it's making profit for you, the broker on behalf of Lexo or on behalf of Tradeversity will be deducting 30% from your trades. That means from what is coming in. Okay, so trade size. Okay, so trade size is where we need to choose something fixed size. That means you want to fix your size. If you're a crypto trader that knows how to do that, sorry, a forex trader that knows how to do that, fine. Proportion to equity. Okay, I don't know, but most of the time proportion to equity changes because these guys change their equity most of the time also. So proportion to balance also, but we use mirror master size. Okay, mirror master size simply means you're trading in proportion to what is trading. You understand? And if there are excess trade, it goes to a mixed trade. That means it simply means it will not trade for you. So when your capital can't do the trade, it will not trade for you. So mirror master size, okay. And we've chosen that. Then proportion is where we need to be careful. So we are trading with Lexo. Aha. So this proportion is for Lexo. And what I'll be advising you to do here is this. For every 5,000, whether dollars or cents, no matter what you're using, for every 5,000, you use one. So listen, and you use one. For every 5,000, you use one, sorry. And let me take it again. For every 5,000, you use one. Whether 5,000 cents, $5,000 depend on you. You use one. So if you are having 10,000, you use two. Okay. When you're having 15,000, you use three, and so on. So that's one. For high risk takers, we are going to set our stop loss, so that is not going to be an issue. The only thing is the way it will get to the stop loss would also be faster sometimes if trade goes against us. You understand? So it's a little bit high risk to do that. But for you, that feels like you don't want to risk all those things, you want to end cool, you use 0.5 for every 5,000. So 0.5 for every 5,000. So that means if you're using 10,000 capital, you use one. If you are using 15,000 capital, you use 1.5. If you're using 20,000 capital, you use 2 and so on. So that's the way to run it. And note, that simply means in this logic also, assuming you are trading in dollars and you're using 1,000. If 5,000 is using 1 for high risk, 5,000 is using 1. So that simply means that if you are using dollars and you have $1,000, you're not using cents, $1,000, that simply means you'll be using 0.2 on a high risk. And you'll be using 0.1 on a low risk. Do you understand what I'm saying now? You understand? So I'm just trying to tell you that it's a ratio that you look into. It's the ratio you look into, because sometimes not all of us are using cents. Cents is for those of us that are having lower capital that wants to at least still trade perfectly well. So we convert it to cents so that it can at least match up with what the master is doing. So this uh, this is 11,000 capital, so I can use 1 on a low risk because it is still 10,000. It is not up to 15,000. So I'll use 1 for a low risk. And if you feel that you can use 2, you use 2 for a high risk. You understand? So 1 is cool for low risk. That means the difference is this. Get it right. We are going to set our stop loss to be 30%. So if you're using 1 and you are using 0.5, 0.5 will take a longer time before it gets to 30% and cut you out. While 1 will take a shorter time. That doesn't mean it will always go there. They are professional traders. It doesn't have to go there. But the thing is, it is safer here, but there is more money here. You're getting it now. So that's just it. So use 1 if you are high risk taker, and use 0.5 for every 5,000. But now, note, don't go and have probably 12,000 and start using 3. Or, understand. So far you're using high risk, you now use 3. Make sure it is up to 5, as in every 5. That is when you increase it. You understand? So every 5,000, increase in a multiple of 1 or multiple of 0.5. Depends on you. So you are in control of your capital. How do we say this? I'm not your financial advisor. So that being said, okay, round up to minimum trade size. Okay, I'll click on this. Copy existing trades. Don't copy existing trades, because you don't know where they are. You understand? You don't know. You always do another trade when another trade comes in. So because existing trade, the person has analyzed it and you don't know where the trade is. The trade might be almost selling point when you be coming in. So you don't have to. Then you go down and you agree to copy. Then I confirm, then okay. Yes. Yes. Now, max drawdown. You click on max drawdown here to set your stop loss. Okay. Now, to set the stop loss, the soft stop level and the hard stop level, the difference is this. The soft stop level simply means that when a trade gets to that percentage, when your capital goes against you to a particular percentage, it will do what? It will shut down all trades and accept your loss. And if the trader decides to make another trade, it will open new trade and start afresh. But when it comes to hard, this one is hard and stubborn. Excuse me. It simply means that this person, when it gets to a particular percentage, it will cut it off. but it will not trade for you again. It will now, you will now be the one to come and like, let's start trading again. So you might decide to choose the guy again or choose another person. You understand? So that's the difference. So it now depends on you. We trust the system, so you can put in soft. And if you just want to be very careful that, is this guy stable back? Before somebody can lose 30% of your capital, somebody that has been trading and giving you good money, probably it might not be in good time, or it might be on, you know, shall you live? Teasing. So you might want to like, oh, no, no, no. Let me come back and confirm that it's stable again before I start, before you could trade for me. So probably let's choose add. Okay, I think that is more safe. At least get the news that, oh, is this guy stable again? So let's choose add. Now, at add, what percentage do you feel like you can lose in total? Okay, what percentage? What percentage? Talk to me. What percentage? Okay. 30% is cool. Is very cool. 30% is very cool. But if you choose 15%, it simply means it will get you, trades might get down 15%, 20% before going up. So I feel the minimum you can choose should be 25%, and 30% is also okay. But you shouldn't choose more than 40% because you don't want to lose your entire capital, especially when you're trading with huge capital. Unless you know that you have made a lot of profit and you feel like, if they come out their 30% safe, I'm still good. I'm not in loss. You understand that kind of a thing. So I'll prefer 30% to give it room and not to lose too much. I'll prefer 30%, but like I said, you can choose 25, you can choose what else again? 35, 40, but not more than 40, not less than 25. So I'll prefer 30%. I'll choose 30%. Okay, 30%. Okay, so, and I choose add, then I choose agree. Let me agree with this. What is this? Well, it says stop level must be greater than 0. Okay. You want us to set something there at most, at all costs. How about now? Doesn't have to now. Okay. Let's see if it rolls. Otherwise, we'll go and set it as 30. I think it rolled. Okay. Let's see. You come and confirm here if you're, so it is under strategy here simply means you're trading already. That means you are connected with this guy already. So you're free to trade. So whenever this guy comes up with any trade, it trades for you. You make money. So anytime he comes back, today's Sunday, he'll be coming back on Monday to trade. And immediately he's trading, you are also trading at that proportion. So I think this makes sense. You can also watch my next video on the second trader, which I will be recommending to you. Thank you. God bless you.